Hi, my name is Fedré Ferreira and I'm a Senior Technical Manager at EFRAG, and I am here to present the educational session on Draft ESRS G1 Business Conduct. We will do this session in two parts. We will firstly look at the requirements under CSRD, and then we will look at the various disclosure requirements in more detail. If you look at the slides, you will also find two appendices. Number one, where we explain where the DRs are coming from. You will also find this information in the basis for conclusions, which we will issue shortly. And secondly, we explain how the draft standard had changed from the draft exposure drafts that were issued in April. So if we start with CSRD and its requirements, CSRD inserts Article 29B into the Accounting Directive. And then of that Article 29B, you have paragraph or Article 2C that specifies certain information that undertakings have to disclose. So the first two are covered by ESRS 2, our cross-cutting standard on general disclosures. So we've included those with Gov 1 and Gov 5, and they do not form part of this standard. The remainder of the three topics or three subsections that CSRD asked us to cover is in this standard. So we're looking at business ethics and corporate culture, we're looking at corruption, bribery, whistleblowers and animal welfare protection, as well as aspects around political influence and lobbying activities. Then when we get to the management and quality of relationships, it gets a bit more complex again, because customers and affected communities are covered in the social standards, specifically draft S4 and S3, whereas suppliers are covered in G1. If we then move to business conduct, firstly, we want to define what do we mean by business conduct or business conduct matters. So business conduct is a wide range of behaviors that support transparent and sustainability practice for the benefit of all stakeholders. So what we cover here are effectively what CSRD asked us to cover in the standard. So we have, as I just mentioned, corporate culture, the relationship with suppliers, corruption and bribery, political influence and lobbying, whistleblowers, animal welfare, and payment practices, which is a subset of the relationship with suppliers. So this is the definition of business conduct and business matters in paragraph 2 of the standard. If we look at further details, specifically the requirements in the standard, we will start with the impact, risk, and opportunity management disclosure requirements. And here I start with ESRS G1. So if we start with IRO management disclosure requirements, we look at corporate culture, and business conduct policies. So here we want information about the strategy, implementations, and outcomes in respect of corporate culture. So if we look at the definition of corporate culture, this was quite a tricky one because we all know what it is, but it's very hard to define. EFRAG went with a definition that we say that corporate culture expresses goals through values and beliefs, and it guides activities through shared assumptions. And you can also see this expressed as values or mission statements or a code of conduct. So here we don't ask for information about the corporate culture itself, but rather around the strategy, how that is implemented, and how the outcomes of that strategy is evaluated. Then we require specific business conduct policies. We have definitions for corruption and bribery, and in the Appendix A of the standard. And then specifically SFDR, the regulation for financial market participants, asked us to have specific data points where you have a lack of policies against corruption, bribery, which are consistent with the UN Convention Against Corruption, as well as a lack of policies to protect whistleblowers. Then the other business conduct policies cover the topics I have mentioned already. If we look at the second disclosure requirement, we look at the supplier relationship management. And here we have various topics that we are covering. So we want to know about the policies to prevent late payments. And then here we want to focus specifically on SMEs, given the concerns around cash flow to SMEs and the problems that create for them specifically. We also want to understand the strategy in terms of this relationship, given any vulnerabilities or risk to the supply chain generally and sustainability as well. Then when you choose your suppliers, do you consider social and environmental criteria? And lastly, we want more information about support of vulnerable suppliers to improve their performance with respect to social and environment. On this point, but it is a more broad point, I do want to emphasize that whenever you look at the topical standards, so the 5 environmental standards, the 4 social standards, please do not view them individually. You have to read them in the context of our 2 cross-cutting standards, ESRS 1, general requirements, and ESRS 2 on general disclosures. So all of these requirements are only applicable or have to be disclosed if it's either SFDR or otherwise required by an EU regulation or law. And secondly, if it is required due to the materiality assessment. So only if these topics are material to the undertaking do you have to provide these disclosures. Also look at the requirements around specific data points and whether you have to provide those or not. And if you do not provide any of the disclosures in the standard, there are also specific disclosures you have to make in this regard. But if we move on to G1 specifically again, so the next topic disclosure requirement I want to cover is the prevention and detection of corruption. So here we have a mix of 2 definitions. We have Transparency International definition of abuse of entrusted power for private gain. And then the EU, or the European Commission, had elaborated on that and added which can be instigated by individuals or organizations. GRI then have very concrete examples like facilitation payments, fraud, extortion, collusion, money laundering. So we included that in our definition. So here we want to understand the procedures the undertaking has to prevent, detect, and address allegations. And of course, it's important that the investigations are done independently from the chain of command. We also want to understand how the results from such procedures and investigations are reported to the AMSBs, which is our shorthand for administrative, management, and supervisory bodies of the undertaking. And then if you have no policies, you need to disclose that. And also how you communicate your policies to whom they may be relevant. And these can be your suppliers, it can be your customers, it can also be your own workforce or workers in the value chain. And then we have certain disclosures requirements around training. And the reason for this is that training is a very important tool in the toolbox to avoid corruption and bribery. So we have certain requirements in that area. If we then look at targets and metrics, the first one that we start is the disclosure requirement about confirmed incidents of corruption and bribery. Now here it is important, and I'm focusing on the definition that you again will find in Appendix A, that an incident of corruption has been found to be substantiated. That is what we mean by a confirmed incident of corruption or bribery. Important to note here that you do not need confirmation of a judge or a court case or anything like that. So the confirmation can be internally by somebody similar to a compliance officer, but also externally by an authority, so like a regulator, etc. All the requirements data points, in this disclosure requirement comes from either SFDR or GRI. So for those of you already reporting under GRI, this would hopefully not be too much additional burden. It's also important to note that unless your materiality assessment shows differently, you are required to provide very limited value chain information. And you only have to report value chain information if members of your value chain with yourself, so there has been an incidence of corruption that has been confirmed, which include your own workforce as well as members of the value chain. So you do not have to disclose those confirmed incidents in the value chain of which your undertaking did not form part. So we try to limit the value chain information that have to be provided. If we move to political influence and lobbying, as I have alluded to, here we distinguish between political contributions and lobbying activities. So political contributions is really those support money, various other ways that you can support them, provided to political parties and their representatives or people seeking political office. This is different to lobbying, where what you're trying to do is to influence the formulation or implementation of policy. So again, further information in Appendix A and also a bit in Appendix B, but it is important to distinguish between these two, because for political contribution, we ask information about the financial contribution you have made, so the monetary values aggregated by country, recipient, beneficiary, which can seem very onerous, but this is only for political party representatives, etc. Lobbying activities, however, we ask for the main topics covered and then the undertaking's main positions. And we want to understand, or users would like to understand, how this interacts with your material impacts, risk, and opportunities. If you want to provide financial information on lobbying activities, that is completely allowed, as we explain in Appendix B, but it is not required. What is required is that you provide information about the transparency register. If you are registered in a local transparency register, then you have to provide those details. And then lastly, in this section, we also ask for information for those members of the AMSBs who held a comparable position. So they've been appointed in the current year, but in the previous 2 years, they may have worked either in public administration or a regulator. So we want to understand if there has been a transfer from public sector to the AMSB of the undertaking. Then lastly, we get to the topic of payment practices. So here, as I indicated, the average time to pay an invoice is already a requirement done by Spanish entities, where they calculate the number of days to pay. And then what we have also is we ask for the standard payment terms, again in number of days, but here you can aggregate by main category of suppliers and the percentage alignment with these standard terms. You will find a very simplistic example in Appendix B of what this disclosure could look like. We also want information about any legal proceedings during the reporting period for late payments. And then where you feel that you need to provide additional information to give context, we do require this. So for example, we've had some people who are very concerned that if you have a consolidated number, this might not be a fair reflection of, say, your payment practices in your home country or in Europe, because you will have to take the numbers from all your subsidiaries. Here, it would be a good idea to then provide additional information, like saying, oh, in this country, the general payment terms are 180 days or whatever the case may be, and explain how that average number do not reflect what you think people should understand about your approach to payment practices. So this, again, we provide some simplistic but examples of how you can disclose this. So this is the end of our more detailed session on draft G1 on business conduct. As I mentioned in the slides, we have some further information about changes from the draft exposure drafts. You might find that useful if you followed our standard setting process very closely. And please do have a look at our other videos. Thank you very much.